My name is Chris Campbell. I'm a practicing CPA, and I work with small businesses and individuals to help them pay the least amount of taxes possible while staying out of jail. So today I wanted to talk about something called hobby losses, and wanted to go through that because a disturbing play that I've been seeing as of recent. So there are folks who operate or run businesses with the pure intent of having a loss to use that to offset other income. So the typical play is said taxpayer gets income from elsewhere. So whether that be a W-2 job, possibly another business, but they have a primary source of income and they use this particular business, and I'll put that in quotes, business, and there's really not much of an intent to have a profit here. The taxpayer, for the most part, they're anticipating having losses from the activity, and they say, no big deal, we'll just offset that against my other income, I'll save on taxes, and it's a win. However, the IRS looks on that as a no-no. If you're operating a business, a general rule of thumb with the IRS states that you need to be profitable in at least, or turn a profit in at least 3 of the last 5 years for the business. Otherwise, if you're not, the IRS may deem that business as a hobby. And the reason why that's important, if the IRS deems your business as a hobby and not a business, you are not allowed to deduct business expenses against that income. Now, you would have to still report the income, but if it's deemed a hobby, you can't deduct any expenses off of it. Or I should say that it wouldn't allow you to report any other losses on that. So it's very important to make sure that you don't get deemed as a hobby loss. And another big issue that you face with that is the IRS will look back. Where I've seen a number of people get jammed up is operating as a hobby, and you raise the flags if you show loss year after year. After a couple years, the IRS is going to say, hey, you have this business, so to speak, but you've yet to turn a profit. And then that's when they start looking at your current year, and then they'll start going back and looking at prior years. So you could potentially be in a situation where they can go back and revise 3, 4, 5 years worth of tax returns, wipe out all those expenses that you've been reporting, and say that now that those expenses are off the table, here's your new tax bill, and you got to pay us that back with interest. You can get jammed up pretty well if you are deemed a hobby loss, because they never really catch it in just 1 year. But you got to use that rule of thumb. 3 out of the last 5 years, you have to be profitable. So that's the rule of thumb. I won't say it's a hard and fast rule, but just understand that once you start going beyond year 3, you get into year 3, year 4, and you're still not showing a profit, then that can start raising some flags for you. The 3 to 5 year is the benchmark, but there are other things that they'll look at. So if you do get audited, they're going to look at a number of other factors. So I want to go through a couple of the factors here that the IRS will look at to determine if your activity is indeed a hobby or not. One of the things that they look at is the time and the effort spent on this business. Are you putting in the necessary time for this business to be profitable? The easiest way to explain it is that, is this side gig, side hustle, not necessarily your main source of income? Even if it is considered a side gig or hustle, they want to know that you're putting in the time to make this thing work. If it's treated as a side gig, you're not only putting in but so much time, that's not going to work in your favor. But you want to show that you're putting in significant time and you're really making an effort to make this thing work. The other thing is that, do you depend on this income to live? If this is something where if your primary source of income and you're pouring all your effort into it and it's just not working, then it might be deemed more of a business than a hobby. But if you're not necessarily living and dying by it, and it's not a part of your income matrix or makeup, or you're just anticipating not making any money from this, then that could spell trouble for you as far as the hobby loss. The other thing is, do you know what you're doing in the field? Do you have any expertise in the field? Do you have a background in this field? You can easily show that you have what it takes to make this profitable. So your background and your experience will come into play there. The other is, are the losses beyond your control? The biggest prime example I can think of that, let's say that you started a business right before the pandemic. So pandemic hit in 2020. Say you started a business in 2018, 18, 19, you're still getting it off the ground, so you're still showing losses. You think you're on your way, And then 2020 comes, pandemic hits, everybody's business goes down. 2020 might obviously be a loss as well, 2021. So that would extend beyond the 3 out of the 5-year rule, where obviously the pandemic was beyond any of our controls. That's probably one of the most extreme examples I can think of, but I think you get the gist here. So those are the factors that you have to keep in mind to avoid having your business classified as a hobby loss. So that's all for now. I hope this helped. If you have any more questions about this topic or any other accounting or tax related questions, feel free to reach out. Happy to help. All right, that's all for now. I'll talk to you on the next one.